Hey, welcome back to another trading journal for the week of October 13th. This week, this week's theme is death by 1,000 cuts. Uh, the big bright P&L on the thumbnail of $3,000, it's misleading because that's closed P&L. I overmanaged this week, paid tons in fees, and I'm sitting on some bags. At the same time, my portfolio hit an all-time high this week, but has since pulled back, and we'll go into all of that in this week's video. So last week, if you recall, I had a very large drawdown on Friday, right up in here. Portfolio pulled back like $18,000. It's since recovered. Like I said, it is back to all-time highs, or it hit all-time highs this week. But the way I traded this week was not something I am proud of, and I want to fix that. I don't want to repeat what I've done this week in the future. Most of what happened this week was at a high level. The market was very indecisive on where it wanted to go after Trump's tweets and market volatility on Friday. So we were dancing at these major moving averages, the 20-day, the 5-day, the 10-day. We were just bouncing along all of these the whole week. And that made it very difficult psychologically for me because I had some larger positions open, namely on Google, and I was constantly in fear. So I was like, oh, should I hedge here? And then I'd sell calls, but then I'd buy them back and then take a small loss. And then I'd do the same thing over and over again because I'm like, oh, what if it does this? What if it does this? And there wasn't really like a solid, fleshed out plan for what was happening there. And so I got nickel and dimed all week doing stuff like that. Additionally, because I still like Google a lot, I still have pretty much on my position recovering from Friday's drawdown, and I still really like Google. So I was trying to trade it on the way up, and I did trade it successfully to an extent, but I certainly overtraded Google because I was trading options. So this is Monday. You can see I was charting all week. I know some of you hate drawing lines. I like doing it for visualizing what's going on a little better. But I was over trading Google, and it was even worse because I was using options instead of shares. Mostly because I didn't want to deal with lots and assigning lots for tax purposes. So I was trading options, but because I was exiting so often because of, for lack of a better term, inexperience trading options, because of the way it moves, it's harder to set certain stop losses based on certain values. Sizing is a little harder. So I was entering and exiting really quickly in a lot of positions and just paying an exorbitant amount in fees all throughout the week. And that's something that I'm going to avoid going forward and go back to just trading shares unless it's like, okay, I can really get into this one option position or one call position or one put position, and it'll be something that I can hold on to and won't overtrade. Because $500 in fees in options is bonkers. So I'm going to try not to replicate that in the future. What else happened this week? Right, so in a similar vein of trading on fear, I was assigned shares of AMD at 222.5 on Monday, which is fine. But it pulled back, and I got scared because it was trading under this 5-day moving average. And again, it's this theme of trading on fear. And I sold calls when it was pulling back like this at a price that wouldn't make me any money. Like I was going to lose $320, and then it went up and spiked, and I'm just like, I'm in a position where AMD's gone up from my entry price, and I can't do anything about it. So I ended up rolling the calls. So I closed some calls for like a $3,000 loss, and I resold them. So I still have some calls open, which will net me a few $100s on the total trade. But still, that's it's disappointing how fearfully I traded this. What else? Oh right. Oh god. Yeah, this week was just full of bad decisions. Let's go to rare earth minerals. So I was texting somebody. This was not within my rules, within my rule book. So UAMY was pumping this past couple weeks, and a friend texted like, "Hey, look at UAMY." I'm like, "Oh, that's interesting. Oh my gosh." And I checked it after hours. I was like, "Wow, it's really going up after hours." So Monday, I check on it, and wow, it has pretty good buying after hours. I bought in. My cost base was like 1809 for 300 shares, and all the way up. I looked at it. I was like, "Wow, I can sell this, get a $600 gain right here, and be really happy with where it's at." Did I do that? Absolutely not. It was just horrible decision making. There's no rhyme or reason to, in terms of risk management, where my exit, there was no exit strategy, nothing. So then when Monday came and it sold off at open immediately, or Tuesday came and it sold off at open immediately, I was like, well, that's freaking terrible because now it's $2 below my cost basis. Now I'm down 600. So I ended up closing the position down at 1366 when it was breaking through this 5-day moving average again, and I took oh god, how much was it? A $970 loss, so almost $1,000 loss on UAMY because I entered a position basically randomly, not following any sort of trade rules. I was just speculating and oversized with no little to no risk management. The only reason I didn't lose more was because I had sold a call or some calls on my position, so my downside was slightly mitigated, but that's pretty bad, right? Another position I have open, NBIS. So I'd sold calls a prior week. I sold in the money calls at 128 or 129 for my 200 shares, and that gave me protection down to $125 a share. Which, at the time, selling it with protection down to these major moving averages, below the major moving averages, seemed like a good trade. Unfortunately, NBIS has since sold off even more. So overall on the trade, I'm down $2,000 if you look at where my break even was. If you look at it from a open P&L point of view, like sure I closed some, but what's open is down like $4,000 or something like that. So this is a position I'm a little concerned about. I'm not overly concerned about because the AI bubble has not popped yet, and I think it will take a little more for the AI bubble to pop if it does. What'll be really concerning for me is if it like starts running through this Bollinger and I start taking some serious heat. But I'll sell some calls up here near my break even, my previous break even, and we'll see how the market reacts on Monday. I did have a really great day on Wednesday. So Wednesday was a day where I kind of, where's Monday, Tuesday, Wednesday. I was just like, I'm going to trade, like actually trade, instead of like freaking out about whatever open positions I have on. And when I did that, I did really, really well. Like extremely well. I made $800 off of active day trading on Wednesday because that was like the only day of the week where I actually traded like following my rules. So I clearly when I follow my rules and I'm not over managing my open positions, I can have good days of trading, like really great days of trading. Yeah, I just need to constantly reassess where I am mentally, so that I can reset faster and get my head back into the game. All right, and finally a story. So story time. I got margin called. Kind of. Well, no, it is a margin call. I got day trade called. So, you know how I was talking about how I was over managing my Google position? I sold covered calls or opened a calendar spread. I had 100 shares of Google and then three long calls in the money, expiring March. And on either Monday or Tuesday, I sold calls on the position, but then I bought them back on the same day. And because I was selling and buying back calls on the same day, even though I had an underlying position, it was treated as using my intraday buying power. And then the following day, I was like, well, why can't I sell calls on my existing position? And I check my account, everything looks okay. I call into Fidelity. I'm like, hey, yo, what's going on here? Can I sell my calls here? And the guy on the phone was like, "Yeah, your margin looks like you don't really have margin left, but like you have cash to cover the trade. It should be fine." And so he puts in the order for me, and it goes through, and it's like, okay, cool, great, that's awesome. But then the next day, I check, and I'm like, what's going on here? Like, I check my balances. It says I have a day trade call for $6,700 in my Roth IRA, and I was like, what is this? I literally called yesterday, and they put in a trade for me. They said my account looked fine. So I called in again, and they were like, oh, yeah, the guy must have just missed it. I'm like, well, that's strange, but okay. And basically, because of my over managing my positions and not paying attention to my intraday buying power, I got a day trade call, and I had to do a day trade liquidation because I can't deposit into my Roth, and so I had to liquidate some of my Google position, unfortunately. But yeah, the more you know. First margin call ever. Thankfully, it wasn't like me losing my pants margin call. It was like a oops, I overtraded margin call. So not the end of the world. Lesson learned. Paid my tuition a little bit. Honestly, was okay because I got out for a little bit of a profit on Google. But live and learn, right? Live and learn. But yeah, anyways, my Google position is actually up a solid amount. It was in a almost $9,000 drawdown down here, and now I'm in like a $6,000-7,000 gain. And I really like what this chart's doing. It's broken out of this trend here. Really good strength coming out of last week. I'm very happy with how I'm positioned. Depending on how far it runs, I may or may not hold through earnings, or I'll sell part of my position into earnings and then hold some of it. But we'll see how this week plays out. I'm not really sure where the market wants to go. It still seems like it's in this range. So stay safe out there. Make your decisions wisely, and maybe you learn something. So if you stuck around this long, I think you appreciate your time. Appreciate you sticking around and listening to me yap. And I'll catch you next week.